Good afternoon, everyone. My name is Eveli Leppamets. I'm from Nasdaq Tallinn and welcome you all today on Baltic Horizon Fund webinar. The webinar will be hosted by the fund manager of Baltic Horizon Fund, Mr. Tarmo Karotam. Firstly, Mr. Karotam will introduce Baltic Horizon Fund's third quarter results of 2017. Right after the presentation, we will open the floor for questions. I invite you to use the question box on the right side of the screen to send your questions in. All questions will be answered after the presentation. Mr. Karatam, if you are ready, please, you can start your presentation.
Thank you, Eveli. Hello, and thank you for joining on the Baltic Horizon webinar. More specifically, I would like to introduce the agenda for today. And as usual, at the beginning, I would like to give you an update on the portfolio, then talk about the Q3 financial results. Thirdly, also give more specific details on the loan overview portfolio in accordance what's also been published in the Q3 report, which hopefully you have all read already. Then I would like to specifically talk a little bit more about the updated dividend policy. Finally, give an update also on the price movement and the future outlook, the way we see it. This time, the Q3 webinar has been organized slightly later due to a lot of activity in the fund in November, and I thought it would be more interesting if also those events have been completed in order to be able to talk about that a little bit as well. So let's give it a go. I would like to start out by stating that we were finally able to close the transaction in Riga and Latvia. This is the 10th acquisition of the fund. We have actually been negotiating this transaction since beginning of the year. In Latvia, I would say that the transactions overall are more complex, mostly from the legal and transaction point of view. More, I would say, bureaucratic. But I think the main reason why we had negotiated this transaction for such a long time was the fact that in Latvia the tax system is changing, and quite markedly so that additional due diligence was needed on the tax going forward. This was a share deal, so we had to look at, and we're actually still analyzing how to make sure that we're able to get the maximum efficiency from this property in the future in terms of return profile. As you know, we are a dividend-oriented investor, so it is important for us to be able to extract and pay quarterly dividends for our investors as much as possible. All that being said, I think we're very content with this investment. This I would say represents a typical one of the typical investments that Baltic Horizon is in the Baltic states trying to make, meaning that strong tenants and with some kind of upside potential. The tenant is a Latvian state forestry company, and it's one of the most interesting companies actually in Latvia. Started back in the late 90s. They are managing the forests for the Latvian state, so to add value to the forest in one way or the other. And they are extremely, I think, well capitalized company. I think it was last year then they actually posted a profit which was the largest, second largest in Latvia. And having met as well the top management of this company, I'm quite confident that the stableness of this tenant is there. It's a very well managed company with a very good reputation. And also having heard the story behind the team looking for their own headquarters now since for 10 years. So I understood that they're very content with the new building, and I think that is also when we look at the lease contract, then it was signed for 20 years with an option to break it in 2024. But I'm quite confident that in case the growth is stable for the company, they would stay there for a longer period of time. Now, having said that, it's a good cash flow producing property. There is also additional building rights on the land plot. And we have, as well, during the due diligence, done a few feasibility studies to see what could be the best solution there going forward. And we're still working on what kind of a project that could be, whether it's 7,000 square meters or larger. Maximum building rights there, in addition to this, is about 18,000, but that's probably too ambitious given all the technical feasibilities. But I think we will definitely be looking into being able to extend or build another similar type of an office building on these premises in the coming years. Moving forward, then, how the property portfolio now looks like, and remember before we got listed back in 2016 that we had 5 properties in the portfolio, and it was one of the main, let's say, preconditions for the investor base back then is to grow the fund and grow the fund with interesting, attractive cash flow properties in the Baltic capitals, so that the investor base will become more diversified, as well as the portfolio will become more diversified. And with the 10th property now acquired in the past, let's say it's a 5th property in the past 18 months. The geographical allocation and segment distribution is what you can see on this slide. I think it's well diversified. We still see quite a lot of opportunities in Riga. I think Riga is considered as an attractive investment market today due to, I think, better commercial transaction possibilities. As well as it is still the largest city in the Baltics. And we will be looking into Riga also in the coming months. Now, when you would like to hear a few words about the current portfolio, then what are the updates? What has been happening in these properties over the past quarter compared to the second quarter? Then I think that the tenants in the buildings have been stable. We have been able to prolong one lease agreement with Swedbank in Lincona by another 5 years, and also have been able to finish the Domus Pro 3rd stage expansion. So some new tenants have also come into that building. Otherwise, I think a lot of work is if you ask me where I spend most of the time today, then it is definitely in the retail segment. In Europa Shopping Center, we have been upgrading the food and beverage offering, and then the restaurant Fortas was just reopening its doors a couple of weeks ago. And as well, Pirita Shopping Center in Tallinn, where we have been looking into changing the satellite tenants there to with more let's say destination type of tenants that would serve the community and the people in the area better. As well, in Domus Pro, the expansion has happened, and a lot of focus has also been on Coca-Cola Plaza and on the potential expansion there over the past this last quarter. Just quickly, we have grown to approximately 180 million euro fund, and we are by now year end we are doing property valuations, and that will be reflected in the NAV of the fund at year end. As you probably know, we do valuations semi-annually and annually. And I had a few questions received earlier about the NAV development of the fund. I will talk a little bit more about that in the later slides, but yes, if you look at the development of our NAV, then the monthly changes are really happening due to the net cash flow production of the fund, and any kind of, let's say, bigger jumps in NAV could be possible either at half year or year end. So it depends on the valuations, and it depends on, for example, Domus Pro expansion. The third stage currently has been booked at the construction cost level, so that will also be affecting the NAV now when we have the valuations in. It has not been included in valuations before. Then just a few highlights. Latvian State Forestry has become now the largest tenant in our property portfolio, and maybe a few things I didn't mention. We are now fully leased also with Dueta office building in Vilnius, with the Vilnius water supply, and Lindorf then making the two major tenants in there. In Domus Pro third stage, we have, which is, on a ground floor you have the retail, and on the top floor you have offices. We have Fitness Gym, who actually expanded, and Fitness Sports Club. It's an interesting tenant, I would say. It was and these has fitted in the, I would call, the more high-end sort of segment of Vilnius health club market. So they have made a lot of investments into the property, into the premises, and it's good to see that they have a lot of customers, and I would say it's a unique product for citizens of Vilnius, and it doesn't really compete that directly with, for example, MyFitness or Impulse or other gym names, because of its high level, let's say, product and offering. So they're more than 2,200 square meters they have now rented. So they wanted more premises. So they also took some more space in stage 3. Then happy to welcome also Pet City, the Estonian company, in our stage 3 as the retail tenant on the ground floor. And then we have some office tenants, Inspecta Engineering, due diligence company, Ald Automotive, and Pristis. So quite content about that. I think the overall tenant mix in Domus Pro is almost optimal right now. So hopefully you will have a chance to visit it. Then Swedbank's lease agreement in Lincona was prolonged by 5 years, and we're in the process of also negotiating cabot lease agreement by another 5 years. They still have 2 years ongoing, but with their request, we have entered into the negotiations to prolong that lease agreement as well. So moving forward, the main events that happened in let's say in Q3 and also in Q4 was that the capital that we still had uninvested, we were looking for a way to invest it, and finally we have now into the state forestry building. And for the, let's say, for the strategic pipeline that we still have in place in the Baltic capitals, we have gone back to the capital markets to see if we can attract more capital for these investments, and we have done that. A few words maybe about the capital raising in November. We're really trying to match now the funds raised to the acquisitions. So there's been many due diligences ongoing in parallel, and but what was interesting to see, since our investor base is mainly from this region and mainly from Sweden, I would say, still then given the correction in the Swedish real estate market that has been seen there in the property development companies, especially because they are the ones that have been now left with some stock and high-end, for example, residential development properties. Then, given this, a lot of professional Swedish real estate investors, especially, have also now looked towards the Baltic states, and there was a lot of, I think, new investors that we met this time around, and especially professional real estate investors that have sort of considered the Swedish real estate market to be too risky, too expensive. So it's been a very interesting development. Many of them have invested now with us and have even increased their stakes. And for them, and I guess for this regional investors, you know, our investment strategy remains attractive for reasons that we are focusing on more CBD, more core type of properties, which do have some core plus elements, value-added elements as well. But we target international tenants, many of the tenants from Sweden and from the Nordic area, international areas, and that are located in these new buildings, and with the return profile being much more interesting than comparably, for example, in Stockholm today. Now, there's not been so much changes compared to Q2 in regards to gross asset value and net asset value and the yield, since we were only now able to acquire a new property in Q4, but I think the next webinar will be focusing on the Q4 results and the year of 2017 in general. The valuations are ongoing, the audit processes have started, so I think I will be able to talk more about that in January, February, when we have the new webinar and new results out. But yes, one of the highlights still is that we have been able to prolong and fix our property loan portfolio, which beginning of the year was I think it was 2.7 years on average maturity. Now it's close to 4 years. Financial results for Q3. As compared to last year, yes, we have grown, and I think the key difference, and I think this was also seen in the Q3 report, that we did not perform valuations this time in September. Last year, we performed it because it was necessary to do that before listing in Stockholm Stock Exchange in December. But we considered and decided that it is best if we start from this year, 2017 year onwards, to do it only twice, and that is in June and in December. So that's what's been happening this year. So if you're looking for the capital gain element or a valuation gain or loss, from our investments. If you're looking at that number, then you would have to wait until the year end is finalized and the valuations are in. I think overall, let me now go into the next slide. Yeah, that's what I mentioned before, that stage 3 is of Domus Pro is now being classified, reclassified under investment properties at year end based on the new valuation. We had in Q3, if you talk about the capital structure that we had, then since we were looking to deploy the equity that we had raised, and it took a little bit of time, then we decided to pay Domus Pro's loan in order to remove any kind of financial cost in that regard, since we had the equity in there on a short-term basis to be used. However, that also decreased our loan-to-value ratios to 46%, and I would say as a fund manager that for us is a bit too low. It's interesting to say this, but I think where we would create the best return relationship profile for the investors is today within LTV above 50%. I would say closer to 55%. So that's our target now for next year. So we have now a new loan in place also for Domus Pro. So this will be also reflected in the year-end figures. I think this is an interesting slide now, and this shows really the LTV development and the average interest rate, and as well the annual average loan amortization from our loans. So we have, I think, made good progress there overall, especially in the amortization element, and we will be working with that continuously, because the fund management team believes that at this level of LTV there should be actually no amortization of loans. There's no point to amortize an LTV of 46% to 40%. So to get better return profile for the equity investors, this is what we need to work on also in the coming months. But I think our average interest rate is competitively very, very low. We have now also in the process when we had prolonged the loan agreements and the average tenure of these loans, we have been looking at the swap rates and trying to get the best rates to fix the loans. So we're in the process of still fixing some of our loans. Currently, the fixed rate portion of all our loans as of end third quarter is 59%, but we're planning to increase that to 90% now very shortly. And we have now come to the updated dividend policy discussion. We have, since the inception of this investment strategy and of the first fund, Baltic Opportunity Fund, back in 2010, we really had only one kind of a dividend policy, and that's based on the cash flow, generated cash flow. When Baltic Opportunity Fund in the listing was merged into Baltic Horizon Fund, established for the listing, then we updated the dividend policy somewhat. But now, having seen the performance of the fund and also considering some of the things that the investors have proposed us, then we have adjusted our dividend policy to be more precise. And here you can see pretty much the dividend capacity calculation, which we call generated net cash flow. and in that sense, it's quite simple. We are still targeting 7 to 9% of annual dividends to investors from the invested equity, and that we define as paid-in capital since listing, average paid-in capital since listing of the fund on stock exchange in Tallinn. Also, a table from the Q3 report showing what has been the net generation of cash flow from the portfolio, and we have also perhaps what we are now targeting is more of a stabilized distribution of these funds from operations during the year, meaning that what for example we made a dividend payout now early November. This was the last one, and I think there was two things that affected it. Mainly was first of all that we had uninvested equity, which in that quarter, most of the quarter didn't produce any rental income. That has now changed. And the second topic was actually the increase in capex expenditure in Q3. And if you look at the line there, now capex, many times is effectively happening for real estate during summer months. This is for many reasons. So some works only can be done during the summer months, and we had some also investments into fit-out premises, which we are now receiving rental income for example, in Duetto, when we invested some funds to the fit out of Vilnius Vandenis, and then they're actually paying this back through their increased rental levels, and as well some capex happened in Sky, in the facade, and in Lincona, the facade upgrade. So I think in the future we will try to for this purpose, for the dividend calculation and payment purpose, to stabilize our payouts, so that yes, it's not dependent on what exactly is happening with that in that quarter, but what is happening over the year based on the budget that we have come up with, and so it's more stabilized. So I think, long story short, we're very much expecting now, with the new acquisitions and better capital structure, and with the LTV being where it should be, to achieve our targets for this year actually, and also for next year. So 7 to 9%. We're quite confident on that target. Now moving into the stock market and how Baltic Horizon has been doing in the primary listing and secondary listing marketplace. Primary listing then is Tallinn. There's been a bit more trading in Stockholm, since we have more investors listed there on that exchange. And in SEK, whereas in Tallinn, I think that the investors are invested with larger tickets. More, I would say, professional institutional investors are located here. So more long-term oriented investors, I would say, based on what I've heard and seen in the stock market. In Stockholm, yes, more volatility, and also in terms of price, as you we'll see in the next slide. But I think overall we're quite satisfied that we're still very much in the top 10. Our investor base is continuously increasing, and we're putting a lot of effort in marketing ourselves in Sweden, in Stockholm. Effectively, we have let's say it's a PR partner, I would call, that is helping us to to penetrate the main newspapers in Stockholm to create awareness of this Baltic Horizon and the investment strategy that we have. We've been successful in having an article, many articles in some of the newspapers and journals. In Stockholm, Dagens Industry, for example, and we're doing very targeted, let's say, marketing, if you would like to call that, meaning that we really want to, explain ourselves to the audience and not the general public. So we're really picky on where exactly we will do the promotions, and also during the offering phase, we're more targeting with our interesting investment story to get general and almost free coverage by journalists talking about the Baltics and then the Baltic investment case. So I think overall a lot has been done, but this is a long-term process, and more will be done to explain Baltic Horizon's investment strategy to the active investor base, not only in Sweden but also in the area overall. We also had a small article in a Nordic now airplane. I think it is still there in the flight magazine for a couple of months. So yes, where it's a long-term process, but that is definitely helping our as well the turnovers, and that's quite well measurable, the result as well. So the unit price movement and how the unit price moves in our case is we generate net cash flow, but once we declare the payout, dividend payout, then automatically that decreases the NAV because cash is paid out from the system. So the NAV over this year has been quite, let's say, in one place, in or about 1.33 euros, and that has been due to the fact that all cash that we generate is paid out. Now, hopefully, there will be a positive effect on the NAV by year end when the valuations come in, and the NAV is calculated again. So what you should expect from the NAV development is that in a positive scenario that NAV should not increase that much due to the operating cash flows, because they are every quarter they're paid out, but they should be paid. The NAV should increase. Considering the rental increases that we have in our portfolios. There was also a question about rental agreements and how they are indexed and how the rental levels increase, if at all, and is it systematic, or is it every time a separate negotiation with the tenants? The answer to this is that it is all possibilities are there. We have about 180 tenants, some of them on long-term lease agreements, and indexation happens either by local CPI or European Union CPI. I think overall this year the CPI has now CPI figures have been increasing both in Europe, Eurozone, and in Estonia. So we expect some let's say some better alignment of the lease levels now due to the indexations next year, whenever the traditional indexations happen. And but we also have turnover-based rents like in Europa, and as well we have fixed rates, step-up rents. So 1 year 8, the other one 9, the third year 10 euros per square meter. So all in all, of course, the target is for us to real estate is an inflation protected or should be an investment class. So we should be nothing different from that point of view. Now, where I think most of the value is created and now and the future is through expansions, and that we're able to build premises for tenants and have those investments at much higher yields than the traditional acquisitions, and this is expected to increase the average rental income on an annual basis as well. So our targets again, is total return between 12 to 15% per annum, of which cash on cash return is targeted at 7 to 9, and the remainder being the capital gain part coming from from the management with the properties and increase in rental levels. Again, this should be considered as a long-term or even very long-term investment, and considering the properties that we have and are planning to grow the fund with, I think the long-term expansion possibilities and options are there. So to finish up the presentation before any of the questions, then I would like to speak about the future outlook. And I put together a slide with some pictures just to understand from fund managers' perspective how Baltic Horizon is planning to grow in the next coming years. We have about 10 properties currently in the books, and 5 or even 6 of them do have some kind of extension or expansion possibilities. And we have never been developer per se, and we will not become one. However, having done some of these expansions in Domus Pro, we see the value creation that is possible there. And when you do an extension of a current property, then I think the risk return profile is much more attractive than just going into greenfield development. And so we are looking into, I think in the coming years, in addition to operating the portfolio at maximum efficiency as possible, to really make investments predominantly into the expansions of the properties. I'm not saying that we're totally stopping acquiring new properties. I think we have increasingly, as well as other market participants, become critical about the prices in the Baltic capital cities, and are considering only properties that have strategic or some special value for the fund, and that fits well with the portfolio that we have. And so you can believe that as well. 99% of the properties are rejected by us. Now, when I talk about this expansion, Duetto 2, we are partnering there with YIT, the Finnish development group, who has built us the Duetto 1, and we're partnering there as well to start the construction of Duetto 2 as soon as the anchor tenants are found, and we have pre-agreed some commercial conditions, and in case the property is built again to the BREEAM standards with proper occupancy rates, then we have pre-agreed to acquire the property. So let's see how quickly we're able to do that, but that could be definitely something happening next year. Vainodes 1, the state forestry company H-quarters, there is building construction rights on that land plot. We're looking, if you look at the purple rectangle there, then this is a potential office building facing the main arterial road, and we're now looking into being able to develop a architectural project that we can then start to look tenants for. And what I like about Vainodes 1 as well is that is, again, from the portfolio perspective, it is very close to our other office building, Upmalas Biroi. And hopefully we will find some synergies there with tenants that we could have in both buildings, for example. Then G4S headquarters, there are building rights there as well. We're in the process of developing an architectural project there as well, so we could start participating in tenders for tenants. The offering in Tallinn is strong right now of new potential premises, so the competition is quite stiff, but I think we have a good location, good product. So we will definitely increase the competition in Tallinn for the top tenants among these property developers. It's an expansion still, and but yes, the architectural project is in the making. And in Domus Pro, we are considering potentially also a fourth stage. So I think we did together with our development partner there, TK Development, a Danish listed company. We did a very good job of finding the tenants and again having a competitive product for the market. Now, just to compare this and give you an insight, this is a BREEAM office building. If you can see here on the left left below in that picture, it's a BREEAM office building. Excellent, I think natural lights, good quality materials, and fits very, very well into the complex. Also underground parking, and we offered those premises at an average rental rate of €9.5. So I think the price is competitive, the product is competitive and attractive, and the location, even though it is more of a back office location, then again, we fill the property up with good tenants quite quickly. And again, it's good to sell a good product. And last but not least, Coca-Cola Plaza extension. I think there's been quite a lot of press about this also in the past, that together with the neighbor, we're looking to rebuild that corner of the city, considering that that Narva Road is becoming the head street of Tallinn, and the city is putting a lot of effort into making this the street more pedestrian friendly. And so we're right at the corner there. We have had many discussions with the city how we can also fit into their plans, and as well, property investors increase the attractiveness of this area, Rotermann Quarters, the access to Rotermann Quarters and to the old town, and we're very much actively working on this as we speak, and will be also next year. I think that concludes my presentation. I will see if there are any questions, and I see there is one. There is a question from, I think, from Lithuania, that there is a REIT listed, and another REIT listed here in Tallinn Stock Exchange, which I think is a good sign that this area of the stock exchange is also changing. And the question specifically is that this investment real estate investment trust, it's the Eften third fund, has been listed on the main list of the of Tallinn Stock Exchange. We are on the funds list, and the question is, why are we in on different lists? Since we are both alternative investment fund managers, and effectively the structure is almost identical, except for one thing, that they are considered as a legal entity, and we are considered as the fund, even though we're both called real estate funds. It is really a dialogue that we've been having also with Nasdaq, and it's really due to Nasdaq rules. That's all I can really say at this point. I think for example, in Stockholm as well, we are under the AIF list. They have very specific lists for different products, and AIF is I think a it's a subsection of ETFs. I think that's where it is in Stockholm. It's been, let's say, a little bit of a dialogue for us, because we have we have probably a little bit less visibility on Nasdaq's pages, because we're on these lists. However, again, Nasdaq web page is developed in certain way, and they have been open to a request for us to be included in some of these tables. And but then again, Nasdaq's position has been that if the fund, if you are a fund, then if you're an AIF, then one should be on AIF list. But this is a discussion that we're continuously having. So hopefully that answered your question. We don't know if there will be any changes to that. I think maybe the idea is not really to move from one list to another. For example, the main list in Stockholm, it's considerably more expensive, more strenuous to be on that list. So there's no issues for us to be on the list. It's a question of visibility, especially on Nasdaq web pages, but as well on web pages and forums such as LHV forum here in the Baltics, in intranets of investment banks, or what there we have quite a few investors through Avanza and Nordnet as well. So we have been putting our focus on how to be visible on those web pages as well, with our performance and results. So this is all a part of the marketing effort. Now it's a very small screen, but I will try to read another question. What are the main differences in your strategy compared to EFTEN Real Estate Fund 3, which was listed? I think the key difference is, and this is, I think, what also Viljar Arakas, the fund manager of EFTEN 3, has stated himself, is that we are more focused on core property investments in the Baltic capital cities, and that's where our limitations are. And so far, the segments that we have invested into are only in office and in retail, since we believe that there's most value potential in this type of properties over long run. And I mean long run, I mean 10 plus years. As well, our strategy since the beginning has been also to invest into properties which house these back office tenants, and this has been the major trend, an increasing trend in the office market in the Baltic capitals. So brand new buildings filled with strong international tenants, and this has been the key investment. I think one thing Viljar also said in an interview somewhere was that they are not afraid to invest into higher yielding, more illiquid investments in smaller cities, whereas we are targeting more liquid properties in CBDs and the city center areas mostly. And they have also considered logistics in their portfolio today. So I would say that that's the main difference. I have another question. What is your review on retail market development in the Baltics in coming years? Do you see risks in this segment rising? That's a very good question. Yes, we do see risks in this segment rising, I would say in all cities, Tallinn, Riga and Vilnius, due to the increasing offering of retail space, of new retail space in the coming years. So I would say our appetite towards retail is limited, and I think the worst investment you can really make today is some hypermarket somewhere, in the outskirts of the city, which is not surrounded by immediate catchment area, but is rather a destination. I think destination shopping centers will be competing with each other very strongly in the coming years. Maybe not, CBD shopping centers that still have the footfalls, but I think for all of us, in the shopping center field, we have to consider what sort of tenants are suitable now going forward. That what sort of entertainment or services that they do offer for the catchment areas of various shopping centers that we as well have. And that's why I think there's quite a bit of changes happening in shopping centers across the Baltic capitals today, now, and in the future. I think some centers will due to this new supply will suffer more than the others. We have our internal analysis about that and internal views. And as I mentioned, I think hypermarkets are probably the riskiest asset class in retail. That being said, I think we will be monitoring the situation and being a little bit on the sidelines when it comes to these large destination shopping centers potentially, becoming investments of our portfolio in the future. Okay, I don't see more questions. We've been using up about 53 minutes of the allocated time of 1 hour. So if no more questions, then I would like to thank everybody for participating, and hopefully this was interesting for you. And very much looking forward to the year end for the fund to close. And as well, we do have now raised equity for certain investments, and I think you will be hearing from us quite soon about those opportunities. And would also like to take the time to wish everybody a good holiday season. I think it's been a very active year for many of us, and look forward to touch base soon again. So once again, thank you very much, and all the best to everybody. Thanks.